Good morning, everybody. I'm Brian Iverson, co-founder of MyCityLender Home Loans. Here as always with Shane Sauer from Blueink Title Agency, and this is your weekly housing fast break. We'll get to the mortgage rates update and economic news in just a moment, but first, here's Shane with our housing outlook. Good morning, Shane.
Hey, Brian. Good morning. Hey, good morning, everybody. A few things for you this morning. Last week saw another nice gain in inventory for single-family homes in Maricopa County. This has been a slow, steady gain, and as I've said before, we've been in an inventory growth mode since about August of last year. Our 90-day average days on market moved up by 1 day last week here in Maricopa County. Right now, that number sits at 77 days. Historically, this isn't a bad number, but it's far from our most recent low back in July of 22, and that number was 32. Lastly, the percentage of homes that have had at least one or more price decreases or improvements is at 45%, which, considering the market we find ourselves in, isn't a bad number at all. We've been in the 40s since about April of last year, and this is a real positive reflection of our realtors out there managing sellers' expectations. Speaking of knowing what the market will bear, how's it looking for buyers, Brian?
Well, Shane, 'tis the season for things to be something other than what they appear to be. Lenders are out there talking about new loan limits for buyers, but they haven't officially changed yet. News stories are saying rates went lower last week, but they actually inched a bit higher. And there's even talk of a big refi boom, but as you may have guessed, that's not exactly right. Rates continue to move slightly higher last week, yes, higher, while remaining close enough to long-term lows. Current national averages for mortgage rates are 6.21% for conventional loans, 5.8% for FHA, and VA is in at 5.82%. So is there or will there be a refi boom? Well, the answer depends on your frame of reference. There has been a massive surge up from the utterly depressed levels of refi activity over the past 2 years, but that surge has only brought us up to be within line with what had previously been considered the doldrums. So things could certainly pick up from here, although certainly not to historic highs anytime soon. A large proportion of homeowners still have rates in the 2s and 3s, and they won't have a refi incentive for the foreseeable future, apart from debt consolidation or for selling or buying considerations. On a final note, that last week's economic data was mostly forgettable. Inflation continued to support the Fed's increased focus on the labor market. Core PCE prices, the Fed's favorite inflation metric, have been very well behaved, coming in below target yet again, further supporting the Fed rate cuts that we expect at the next meeting in early November. That's going to do it for this one, everybody. Thanks as always for watching. If you have any questions or any comments, leave them below. We'll see you right back here next Tuesday for your weekly housing fast break.